Hey everyone, welcome back for another deep dive. We got a really interesting request for today.
Oh, yeah, this one's gonna be fun.
This listener wants to know all about asset classes. So,
Yeah, they want to build like a proper investment portfolio, but aren't sure where to even begin.
exactly. And they sent over this list of like all these different asset classes. It's a pretty good list, actually. It looks like they've been doing some research, so that's awesome. But yeah, we're going to try to break it all down in a way that hopefully makes sense.
Definitely. It can be confusing to figure out like what are all these different asset classes? What do they moon for my money? How do I choose? So we'll unpack all of that.
Okay, so glancing at this list, it's almost like we're putting together a meal plan.
Yeah.
We've got real estate, commodities, fixed income, equity. It's like the different food groups, but
Mhm.
for your money,
I like that. Because yeah, you wouldn't want to eat only carbs all day, right? You need a balanced diet for a healthy body and a balanced portfolio for healthy finances. Each asset class comes with its own sort of risk profile.
risk profile, what's that?
It's about understanding how much that investment could go up or down in value. Some investments are considered safer, like they're less likely to lose value, but they might not grow as quickly. Others are riskier, but they have the potential for much higher returns.
Okay, so like some investments are a safer bet, but might not make you as much money as fast, while others could make you rich quick, but you also risk losing more.
Exactly. And that's why diversification is so important, which basically just means not putting all your eggs in one basket.
Gotcha. So spreading your money across different types of investments helps reduce the overall risk. It's like if one investment isn't doing so hot, the others can help balance things out. Makes sense. So let's dig into these different food groups then, shall we? First up, real estate. Now, I got to admit, when I think of real estate, I think of like buying a house, but this list also mentions things like REITs.
Right. So owning physical real estate, like a house or that condo you've been eyeing, that's definitely part of it. But there are also financial assets that are tied to real estate, like those REITs you mentioned. Think of it this way. Owning a condo is like baking a cake from scratch. It takes time, effort, and you need to know what you're doing.
Yeah, I'm more of a order takeout kind of person when it comes to baking.
Haha, I hear you. So REITs, on the other hand, they're like buying a slice of cake from a bakery. You still get to enjoy the cake, but someone else has done all the hard work.
Less time baking, more time enjoying the cake. Sign
Yeah.
me up. But seriously, how do REITs actually work?
Good question. So, REITs are companies that own and operate income producing real estate, like apartment buildings, shopping malls, or office spaces. And when you invest in a REIT, you're basically buying a piece of that company and its real estate holdings without actually having to buy any property yourself. They generate income through rental payments or property sales, and then those profits are passed on to investors as dividends.
So it's like getting a slice of the rent money without having to deal with finding tenants or fixing leaky faucets. I like it. Okay, moving on. Commodities. Now, this one always makes me think of like those movies with the gold bars stacked to the ceiling. You know what I'm talking about?
Yeah. There's definitely an allure to precious metals like gold and silver. People have seen them as valuable for centuries, and they tend to hold their value well, especially during times of economic uncertainty. But commodities are more than just shiny metals. It's basically anything that can be bought and sold that is interchangeable with other commodities of the same type.
Interchangeable.
Exactly. So a barrel of oil from one producer is basically the same as a barrel from another producer. So we're talking about things like oil, coffee, wheat, essential goods that people always need.
So does that mean I could like invest in coffee beans? And
Hmm.
what happens if I drink a lot of coffee? Does that count as investing?
Uh-huh. I wish it were that easy. But no, drinking a lot of coffee won't make you a commodity investor. But you can invest in a basket of commodities through ETFs, which are basically like mutual funds, but for commodities. It's a way to get exposure to the price movements of these goods without needing a giant storage facility for all your coffee beans.
Right. No stockpiling coffee beans in my apartment.
Great.
Good to know. Okay, what's next on our list?
Fixed income. This one always seemed kind of, well, a little less exciting to me, like where my fixed deposits go to hang out. They do. Fixed deposits are a great example of fixed income. You're essentially lending money, usually to a bank, for a fixed period at a predetermined interest rate. You know exactly how much your money will grow over that time, which makes it a relatively predictable investment. It's considered lower risk compared to some of the other asset classes.
So it's like the reliable friend of the investment world. Always there for you, not super flashy, but you know what you're going to get. I can appreciate that, but you were about to say, don't dismiss fixed income as boring. just yet.
Exactly. Because there's more to it than just fixed deposits. Bonds, for instance, can be a really interesting investment, especially when the economy is a bit uncertain because people tend to flock to more stable assets. It's kind of like when things get rocky, people look for safety and security, and bonds can offer that. They're seen as less risky than stocks, for example.
Interesting. So, in times of economic uncertainty, bonds are like the popular kid in school.
You could say that. And if you're interested in potentially higher returns from fixed income, there are always debt mutual funds to explore. These funds pool money from multiple investors to invest in a diversified portfolio of bonds.
Gotcha. So, from the steady world of fixed income, we move on to equity, the stock market. This is where things get a little more, shall we say, lively, the place where fortunes are made and lost.
Well, it doesn't have to be that dramatic. But yeah, equity is all about owning a small piece of a company, and those pieces are called stocks. You're basically investing in that company because you believe in its potential for growth. Think of it this way. Let's say you absolutely love a local bakery and believe they're going to be the next big thing. By investing in their company, you're taking a chance on their success.
So if the bakery does well, my investment grows with them. And if they crumble, well,
Exactly. Higher risk, higher reward. And just like bakeries, companies come in all shapes and sizes. You've got your big, established companies, often referred to as blue chip companies. These are like the reliable, well-known bakeries that have been around for years and have a proven track record of success. They might not grow as quickly as a brand new bakery, but they're generally considered a safer investment. And then you've got your smaller, newer companies. They have the potential to grow much faster, but they're also riskier.
risk and reward. Got it. So it's like choosing between investing in a well-established bakery chain versus that trendy new food truck. Both could be great investments, but the food truck is a riskier bet.
Last but not least, we have others on our list. What falls under this mysterious category? This is the realm of alternative investments. We're talking about things like rare stamps, art, vintage wines, even things like private equity or hedge funds.
Okay, so you're saying there's an entire asset class dedicated to collecting rare stamps. Tell me more.
Haha. Well, not exactly. These are often more niche investments that require specialized knowledge and usually come with a higher risk level, at least compared to more traditional asset classes.
Sounds like something to explore once I've mastered the basics.
Absolutely. It's like leveling up in the investing world.
So there you have it. We've covered all the major food groups on our investment menu today, from the stability of fixed income to the potential excitement of equity, and even a little taste of alternative investments. It's been a great overview. But before we wrap things up, any final words of wisdom you'd like to share?
Absolutely. Remember, there's no one-size-fits-all approach to investing. It's about finding the right mix of investments that align with your financial goals, your risk tolerance, and how long you plan on investing. The important thing is to understand your options, do your research, and invest wisely.
Love that. So the next time you're planning your meals, think about your investment portfolio too. Just like a balanced meal keeps your body healthy, a diversified portfolio can help keep your finances in tip-top shape. Until next time.